don't think we have met before with many of you. So I wanted to present my fellow panelist members, Martha, Michał, and Omri. Guys, thanks a lot for joining us today. Looking forward to an interesting conversation. Maybe to start, what I would suggest is we go around and maybe starting with Martha, letting you guys present yourself, introduce yourself personally, but also the organization you're working at, in a couple of words to give a sense to people what's your background.
Sure. Thanks, Alex, and hi, everyone. Delighted to be here. I'm Martha. I run deal flow for Intel Ignite Europe. Intel Ignite is Intel's accelerator for early stage deep tech startups. In that function, I look at around 800 early stage deep tech startups across Europe a year. Maybe just on the organization, we started in Israel in 2019. In Munich, where I'm based, the European team and European program since 2020. In the Americas, based in Boston since last year. And we're just in the process of starting our first UK cohort out of London. So early stage means pre-seed, seed, Series A. And there are two things I want to add in terms of an introduction. The first thing is that before joining Intel, I was leading BizDev at Dell Technologies Capital. So really happy to be with Omri on a panel. And I do want to point out that there's a slight bias in terms of participants in that sense. And the second thing I want to clarify is it's a SaaS panel. So when we say deep tech, that does include SaaS as well. We do have a 50-50 in terms of software, hardware, in terms of the cohorts that we have. So that's 10 twice a year in every hub that I just mentioned. So half of the companies do SaaS. We see typically in AI, software DevOps dev tools, and some companies in the middle that are hardware companies, but still selling SaaS or have a SaaS model. So with that, back to you, Alex. Thanks for that.
Thank you, Martha. Very interesting. Maybe we pass on to Omri to just continue. Sorry, Michał. Turns out it's a bit of a bias here in the panel. We'll give you a chance to start next time. Omri, to you. Omri, I don't think we can hear you. Maybe something with your headset. No sound, sorry. Maybe Michał, then we start with, we continue with you. Also a bit of an intro, and also talk intro of Elevator Ventures. What are you guys focusing on right now?
Sure, absolutely. Happy to do so. First, let's make sure can you hear me well? Good. Okay, so yeah, my name is Michał. I represent Elevator Ventures, and we are basically a CVC of Raiffeisen Bank International, investing primarily in fintechs, primarily across CE, but with some exceptions, with some flexibility around, let's say. Yeah, and our key focus is at Series A companies. However, we can invest also slightly earlier. So at late seed, we can also invest slightly later at Series B. This is the beauty of being a CVC, that we have some flexibility there in some cases. Yeah, that's pretty much about it. We are based in Vienna, and then we are a team of 8 people right now. Investing from our first vehicle. However, we are currently raising our second fund, which will soon be live. And a few words about myself personally. Before joining Elevator Ventures, I was at another VC fund, basically doing more or less the same deals, I would say. So also Series A across CE region, however, more with a deep tech focus. And then before that, I was also at the family office, looking at slightly different asset classes, so more liquid, like bonds and equities. And now here at Lewandowski Ventures, I'm basically at least doing my best to scout for the best fintechs across CE and beyond on a daily basis. That's pretty much it, I would say, in a nutshell.
Perfect. Thank you, Michał. Omri, over to you. Yeah, I don't think we hear you. Sorry. Yeah. Maybe worth trying your computer somehow. Okay, to continue, sorry, we have a bit of a technical glitch, but one of the things I wanted to maybe also like to continue the introductions in a way, guys. If you, it's, and Martha, you mentioned that you guys are looking at 800 companies a year, which is a mind-boggling number of companies to cover. I was wondering if you can give me maybe like a couple of examples of like 1 or 2 deals you guys participated in, which you are personally sort of proud about, or something that you feel is very curious, interesting. So that would give us also a bit of a taste what you guys are focusing on what you're doing.
You want me to start?
Yeah, sure.
Sure. All right. So I will first say, when we say looking at companies, we're a non-dilutive program, and we invest resources, not money. So it's a slightly different way we're looking at companies. Our mandate is to look for companies that are disruptive in the deep tech space, and that's how we go out and look for them. We do have categories of you could say technology or deep tech that we look at. And I think it's very difficult to say what would be my favorite deal, because I think there's elements of things that are really exciting about a number of these things. First, we recently added Web3 as a category that we looked at, so that was something new. I think that's exciting. We also kind of picking up from the panel before, we see generative AI coming into the deal flow a lot more prominently. So AI, machine learning, computer vision is around 20% of our deal flow across cohorts, but generative AI as part of that has increased from the beginning of the year, being around 5% to over 20% right now. So we do see an increase there. That's really interesting as a trend. I think generally from a founder's perspective, what's really interesting to see is technical founders becoming technical people with technical background, engineers, software engineers, PhD scientists becoming founders. That's always really exciting to be able to be part of that journey. So I would say those are some of the highlights in terms of the program. And maybe to conclude, our North Star for the program is how much funding the companies raise after they graduate. And that's around actually over 1.5 billion globally now, which is a lot for early stage companies. And that obviously we're very proud of.
Oh, wow, that's definitely impressive. Thank you, Martha. Omri, shall we try your microphone? Unfortunately, no sound. I don't know. Maybe something with your Chrome settings. Maybe without the headset. Maybe you can. We do want you, Omri. Okay, let's keep trying there. Maybe Omri joins us. Michał, also would be curious. Obviously, you guys are totally different from Intel. I would assume you're part of the banking organization, and we know that fintech in general is a big theme in CVC. So what is your guys focus? What are the deals parameters? What is your strategy? How have you been focusing? And also, again, maybe you can give us a couple of examples of your typical or favorite deals in the last 12 months, let's say.
Sure, absolutely happy to happy to elaborate. Maybe I will start with the second part, so the favorite deal. And here, just exactly as you described, we are maybe a bit different. So here, our North Star is purely TVPI basically, right, and money earned. So this for this reason, the favorite deal that happened for us is the one that we already exited and actually brought us some money, right? So we invested. It was our first investment actually in the RegTech, Austrian company named company, and it is like a perfect example for us. Where the company basically was able to test the product and develop the product together with our BI. So it was like a huge help, huge support from the bank at the very initial stage of the company. Bank was also one of the first customers of the company. So then we really delivered our promise to bring value to the company. And then the story is that the company was basically raising a Series B, it was developing very well, and surprisingly, it got also an acquisition offer from Moody's, which has been accepted. So this one was definitely our favorite, since it's an example of how we could bring value, right? And if the synergies, if basically there is a good match between a corporate and a particular startup and the vertical it's operating. And how then we can basically benefit out of it as being part of the bank. Continuing on a strategy, I have already mentioned that we are driven by return, by simply performance, and this is basically the key, right, for us to understand the Levandowski Ventures. However, we also believe, and we are also using our proximity to the corporate partner, to RBI, to basically get to the best deals, right? That's of course first thing, and to build value for our portfolio companies, right? So there is no prerequisite that we find, I don't know, a business case that we find a cooperation before we invest. However, it's of course welcome, highly welcome, let's say, or beneficial for everyone. So we are always trying to find some synergies. We are always trying to find some positive use cases with the bank, basically ways in which we could meaningfully help the company, because that's in principle what makes us different to other VCs. So
okay, Michał, thank you. A couple of points to pick up on a bit later. Maybe Omri, if your microphone started working, we give you also a chance to introduce yourself briefly.
Thanks, it's working now? Oh, really sorry, but it's amazing. In 2023, still trouble with audio setting, cameras, it's amazing. So
they can't sync it somehow.
Yeah,
I think it's a topic for corporate venture capital. Maybe some of the guys are not here, but we need to give them ideas.
Yeah, so sorry again. So I'm part of Delta Capital. I came after Marta. I'm here 1 year and few months. We are basically a special fund. We have one LP, single LP, basically Dell, Michael Dell. We invest in between seed to round B, seed A and B. Focus on Israel, Europe, and United States. Invest in infrastructure, DevOps, cyber, everything in between, enterprise, software, B2B, and also some deep tech and semiconductor. So this is about us. I'm in venture capital something like 7 years, or maybe a bit more. Before that, I was in a local fund in Israel called Grow Venture. Did some crazy stuff in semiconductor and some in infrastructure as code, in F0, deep checks in MLOps, and common ground in new video conferencing. Maybe it will be better in the future. So this is a bit about us and me.
Interesting. Omri, and maybe just to follow up on that, it sounds like you guys have a relatively diverse focus, both geographically but also sectorally and stage-wise. I was wondering, in terms of, if you could give us a sense of I don't know, how many companies a year are you looking at? What's the size of your sort of fund or operation, and how many deals you will be supporting a year, just to get a sense for the audience.
Sure. So this fund is working very nicely in the last 11 years, investing something like $20 million every year. Last year it was less, probably better for a fund like us, and probably this year much more. Until now, we are managing something like $1.5 billion. I think we invested in more than 150 companies. Right now, we have live more than 75. The team is really great, and I think our companies, we had something like 70 M&As, more than 8 IPOs, and pretty good companies still in the portfolio, but there is no place to do IPO right now, so they will need to wait. Yes.
Interesting, Omri. Maybe to continue our discussion, wanted to pick up on something that Michał mentioned. Historically, when corporate venture capital appeared on the scene and people were starting to make deals, there were a number of bases for this effort, and I feel like over time, the idea, the ideology and philosophy of corporate venture capital has developed, right? And listening to you guys, there are different. Michał is focused on TVPI. For Martha, other things are more important. Omri mentioned other things of focus. How would you, describe maybe the current philosophy? Because corporate venture capital obviously, originally was more focused on trying to find areas or companies that would add value and work together with the corporate, right? And be value additive for corporate either to acquire or maybe in general to develop expertise. How do you see it within your organizations, and in general, are there any other points to or trends that you would note where this sort of construct and segment is moving? I don't know, maybe starting with Michał, since he picked up on first.
Sure, happy to answer. I think what's most challenging about to say about CVC is that it's really it's super diverse, right? Even we are here three representatives on a panel, and each fund has totally different strategy, I would say, and focus area, right? So I will just try to speak for us and what we see on the market, right? And basically what we experience, right, through on our path towards having a CVC is that it is of course still important for a corporate partner, right, to to benefit from other than financially from having a CVC, right, to have some kind of partnership, to have access to basically innovation, and to at least know what's happening on the market, right? However, what we also can see is that in some cases, corporates simply say, okay, if we understand that they cannot develop some competencies by themselves, even when they partner with a startup, right? It sometimes would be just an overkill for the startup itself, and would it put them at the forefront of the market? So if they feel so, then they say, okay, at least let's just have an exposure to it, right? Through a CVC, through a passive stake, and at least earn money on that, right? And that's I think something that shows that the market has a bit matured and then has developed into this direction. That's what we might take.
Martha, what do you think?
Yeah. So maybe let's start. I want to start with a data point. So we look at early stage companies. So that's pre-seed, seed, series A. It's normally in most of the deal flow, it would be seed. And in the top 25 for the 10 companies that we select, we consistently see 1 or 2 companies that have a corporate VC at that stage. So it's a data point to say corporate VC is present in early stage deals and across tech verticals, if you will. So that's one point. I think there's 2 misconceptions about corporate VCs that you kind of touched upon. The first one is not every CVC is like every CVC. They're the ROI-driven ones and they're the non-ROI-driven ones. And we often hear, because we work a lot with companies looking to raise, we often get in the early stages funders who are saying, yeah, we don't want a CVC on our cap table because that means we're seen as being biased, which to some extent, as Michał mentioned, makes sense because you do have a visibility on the company, but equally in the market, it's known that there are certain CVCs that have an ROI-driven approach, and they will invest in even in companies that compete with the core business of their LP, because that's their mandate and because they're looking to make money off of the best technology that's in the market. So that, I would say, is a call to action to all the founders out there, is to do your homework in terms of when you're speaking to the CVC, is it ROI driven or not? That's one. I think the other misconception is to think that when you have a CVC on your cap table, that company becomes your customer. We used to say, there's I think a thing that having your own portfolio companies be a customer, be your own corporate that you're representing, be a customer of your portfolio company, is actually harder than making customer introductions to them. So there is that aspect too. That's not a natural, logical consequence of having the CVC. Of course, you have the logo and you have the ability to use an enormous, typically of really amazing platform teams, ability to get introductions to customers, to partners, but that aspect is a little bit tricky to actually implement. So wanted to address those 2 points.
Martha, thanks a lot for summarizing. I think this is very useful. Omri, would you agree, or how are you guys in terms of your philosophy seeing?
Yeah, so I agree, and all our great comments were a bit different because we are very, our ROI is getting money back, like any other Silicon Valley venture capital. In general, I think my feedback to startups and founders is to always, do due diligence, also their partners, right? Because this is, I'm with my wife for 25 years. I think it's like a marriage for many, many years. It's better to check, right? Not just to look on the internet, to understand what each of one are doing, what is our advantage and disadvantage, if there are success stories between the fund and other startups, not only IPOs and M&A, also the road, also when there is difficult things, right? Now we are not in the best time in the world, and fund like us, it's very easy for us to continue and invest. For example, some of the corporate VC invest in once and cannot invest after. Some of them can continue to invest. This is very important, right? Because you don't need only money for one time, you need money continuously. It's never the last round of a startup or a good one. And the way we look on it, we invest as a group, as a team, as any other fund, and after that we try to connect for this huge company of Dell. It's huge, 160,000 people, and this is amazing for many of the startup. Like Dell can be a client, or maybe not. Like Martha said, Dell could be do joint offering with the startup. Then you get access to so many clients, and in the end, if there is things to collaborate, it will happen. If not, it won't happen. So, but having us on the cap table can help to make it happen, because it's a long process, right? To sell to big corporate, to do joint offering with big corporate. There are so many decision makers. So I think there are many advantages, and also I'm sure there are disadvantages. So better to check.
And how do you guys, you personally approach it? Obviously, there is on one side, there is value add that you as a corporate can bring. And that's probably one of the reasons, the founders will be looking to get engaged with you, especially at the early stage, because potentially there is like expertise and knowledge and know-how, but also it would require, a lot of attention from you as an investment team, but also involvement of the corporate, right? So there's this issue of coordination, large corporate, a lot of bureaucracy. How do you get them focused on like a small thing, which the founder needs like right now, not tomorrow, not in 2 weeks time, right? So on one side, all of this like value add versus the agenda that you might potentially have as a corporate, right? And like other things that you are actually pushing through a term sheet or through like your own deal making. So like this balance of two things, but also like your own, like a little bit of your flavor agenda. How does it like work? How do you balance that? I don't know, maybe starting with Martha.
Yeah, I mean, this is our mandate and our function at Intel Ignite. That's our role, to do exactly what you just said. So our mandate is to work with the most disruptive early stage deep tech companies out there and be able to collaborate with these companies from the get-go. And the way we make that happen is first of all, the structure. So we report into Intel CTO. We're housed in a part of the organization that makes those connections possible. And then the teams are structured in a way, in every hub that I mentioned before, we have a dedicated CTO who comes with a history within Intel and the ability to work with companies and open doors. So is baked into the governance of the team to be able to open doors and create that value on both sides. And we actually have POCs with over a third. We have almost 120 companies that have graduated so far, and we have POCs with Intel of over 30%. POC being as a design partner, as a joint go-to-market, those kind of things. So that there is value, like substantial value that's being created in that sense, and that's our role.
Interesting. Michał, how does it work with Raiffeisen?
Yeah, so here we are basically trying, when it comes to the process itself, we are trying to be as close to a traditional VC than as possible, right? So we're not putting any I would say additional conditions related to RBI and potential cooperation into the deal terms, into the term sheet, whatever, basically, right? So our approach is to explore those potential synergies, of course, ahead of an investment openly with the founder. So we're just having like a brainstorming session, what they think they could get from the bank, what we think we could basically help with, and are trying to find even some totally crazy potential ways to collaborate, to integrate, simply forgetting whether it's possible or not. Keep this list, move forward with an investment, and then try to deliver it later throughout the investment period, right? So the approach is maybe slightly different, but of course then it comes from the fact that our motivation is also slightly different. And then we basically are constantly in touch with the bank, so we know what they are currently working on. We know what kind of technologies they're currently looking for, what are their needs, and thanks to that, it helps us then to also contribute meaningfully to those brainstorming sessions and think of some potential synergies together with the founders.
Omri, and where do you guys fit into the picture? How would you describe your sort of balance between value add and also your corporate agenda, if there is anything specific?
Yeah, so there are, again, like Michael said, we don't have small letters in what we do. You get term sheet same like from any other VC in Israel or in the Silicon Valley or in Europe. We work with those startups very similar to any other VC. We have a great team in the East Coast in the US, working with them, connect them to big enterprise in our network, in financial services, in insurance, in energy, in all aspects. And related to Dell, if there is a chance, if there is something to do, we will help them to do the right process. But also, if it's not the right timing, we will wait. It's less, our highest priority is the startup will succeed. That you will have the right partners on the right timing, the right client, the right go-to-market. So we don't have any hidden agenda. I think what is really giving value to the startup is the experience of the team. I think it's average of probably 15 or 20 years of experience in venture capital. All my partners, my friends, had operational role before. So this is what you really feel, in the day-to-day. You don't feel. But on the other aspect, you have amazing success stories. So like when Silent was acquired by BlackBerry, I think 20 or 25% of their revenues came from Dell. So this is amazing, right? So right now, many founders of Silence coming back to Dell. Also, our last investment, I think, in the US, Lesion, our people came from Silence and know the advantage of working with Dell and with Delta Capital, and the effect it can do for them in go-to-market, in sales, in biz dev. but this is byproduct. It's not we are not investing for specific business unit or taking any hidden agenda of someone and not getting percentage in order to buy cheaper the company. It's not the way we think. We want to get money back, when the company will be acquired or in IPO.
Okay, interesting. So you guys are also more like market commercial driven approach, essentially.
Yeah, exactly.
Okay, interesting. Maybe to spice up, and you guys, I don't know if you're concealing things from us or not, being these, secretive CVCs, but just wondering, like, have there been any conflicts of interest, or I don't know, examples in your life, maybe not mentioning names, where you have run into the situation of a potential conflict, and there you managed it out somehow, in a nice way, or I don't know, maybe not in a nice way, or a situation where it blew up, and maybe some founders should be cautious about it, because also it's how do you agree things upon the inception of the partnership, right? So how do people see things and how do people work about it, right? So it's not necessarily that conflict is a bad thing in a way, right? I mean, it's not great, but you should manage and foresee situations. So I don't know, have you guys had them? Is it something you can share with us?
Alex, I'm going to go while the other two can think about being put on the spot like that. So one thing I wanted to mention, just as a maybe continuation in a difficult situation a little bit, is that we've seen with founders is in relation to CVC, is that there may be founders who are raising their first round. This will be at a below, a single-digit million valuation. They're raising maybe $1 million, and they're saying, "Hey, I'm speaking to X corporate VC, and it's looking good. They're probably it could." And how likely is it that that happens? It's not very likely, right? There is, at that stage, a corporate VC is not going to invest, but they will do the due diligence, maybe because they have a portfolio company that's in that space and they actually want to understand if this is a threat. Maybe because they're genuinely interested and they just want to have an early look into what's happening. So there can be good and bad reasons, but oftentimes founders are not aware of that. They're not aware that this is happening. So I do want to kind of put that out there. I don't think that CVCs are very good at educating in that sense at a very early stage. But I also want to highlight why that can be a good thing, especially if you're a founder if you're onto something really amazing, is because, and kind of going back to the previous point of the discussion, there's an enormous amount of knowledge in every corporate that actually feeds into the due diligence. And it's much faster than a lot of the funds. There's a correlation between the two, because you have the ability to get input from especially I'm talking about deep tech, right? So this is typically disruptive type of solutions. So the speed and the knowledge that you get from doing due diligence with the corporate VC, even though they may not invest, is actually a good thing. It's just something that I think as a founder you should be aware of, that you're not. It goes back to Omri's point about doing your due diligence on the investor, making sure that they don't have a competing portfolio company in their portfolio, but then also using the corporate potentially as, even at an early stage, as a way of creating a FOMO campaign around what their fundraise, and trusting that the corporate VC, if they really like what they see, they will also tell other VCs, and that kind of just helps your story and helps your round when you're in that situation. So a good thing and a bad thing. I'm not sure it really addresses your question of a difficult situation, but
no, it's interesting. It's interesting. Maybe Michał can give us some more spicy stuff from Austria.
Well, as you know, Austria is a relatively calm country, so I will not share any super spicy situation from the past. However, I will gladly share some learnings that we've had from at least the what we've experienced, right? So and I will pick from both from Marta and Omri, right? And in general, I think the potential conflict situations, the potential difficult situations that that we experience typically have one source, which is a mismatch at the very beginning of expectations and understanding of what CVC and between founders and a CVC, right? So here we come again to what we've already said, so that the due diligence part of founders doing the due diligence on the fund, and the fund being, of course, open to share everything, share the approach, and also some reference checks with other founders that we've already invested in is super important. Is basically crucial, right? And every CVC, CVCs are totally different animals, and the mismatch number one that we experience, as Martha already mentioned, that our corporate partner will certainly become a customer of this particular startup, right? Not always it's not always possible. It's not always good for a startup, and it's basically it's not certain, right? I mean, it may materialize, it may not materialize. Second learning, a second potential conflict situation, that our corporate partner, RBI in our case, will certainly acquire a particular startup, will be basically the default exit path, right? I mean, and here again, our approach is that, of course, our corporate partner can be on the list of potential acquirers, but it's just one of many, right? And definitely not the default one. Since we are return driven, it can be any other, basically the one who pays the most, right? So due diligence is, I would say, the key, and of course, then our role is to be open, is to drive this also discussion to build the relationship with the founders, and openly say what we can do, what we can promise, and what we definitely cannot deliver. Be open, be honest about it. Yeah, that's definitely it. And maybe we were just mainly focused on the relationship between founders and a CVC and a fund. However, there is probably there's another basket of potential conflict situations that is like a topic for another panel. So fund and the corporate partner, right? So another I would say potential conflict situation, and here it definitely requires a lot of diplomacy, I would say, in many cases, right?
Well, that's true. I mean, many topics to cover. It's very interesting. I mean, we as VC, we have come across CVC partners, and we do have some in our portfolio companies. But I agree with what has been discussed in terms of expectations, diligence, and also more communication and education. I think, in my mind, it's always important for transparency. Omri, I don't know, like maybe if you had any other examples as well that highlight this subject.
Yeah, so one, we try to be with as less conflict as possible, right? And be as transparent as possible. And I think one juicy story that we can say that there is one great portfolio company, in Dell Capital that right now competing with Dell. And it is what it is. We are not sharing information. The person from our team that is on the board is doing what he's supposed to do and not sending any other information. And there are real walls between the teams, and that's okay. It may be not the best situation, but we are, again, like Michael mentioned before, we're also financial driven, and they're an amazing company, and this is our focus, and everybody is okay with that. So it can also happen. It's a very extreme case, but it can happen. It's also okay.
Maybe because we're running out of time slowly, I just had one more theme which I sort of find interesting as I look at the data, is that European CVC, and because we ourselves come from Eastern Europe as Flashpoint, but also focusing this conference and panel around Eastern Europe and Israel as a big sort of pot for cultivating entrepreneurship. What I find remarkable is that European CVC is so much smaller versus US or Asia. And if you start comparing percentage of VC markets, US, Europe, and Asia, and then if you look at GDP, US, Europe, and Asia, the CVC in Europe, and if you look at, let's say, top 10 CVCs in last year, there is nobody from Europe, right? There are like 6 Americans, 3 Japanese, and like 1 Korean, right? So like even if you look at top 20, there is like barely anybody there. Why do you think that is so? Why do you think, you know, European CVCs are they more conservative? Are they more like why is it not a higher percentage? Why is there not more activity? Because even looking at you guys, okay, considering where Intel is deriving, you know, Dell, it has roots into the US. I think Michał is probably the only proper European sort of CVC in a way. Why do you think that is so? Why is Europe lacking CVC activity? Maybe like briefly your thoughts.
Omri, do you want to go? I can.
No, we'll go ahead.
So just a few, I think that's a complex question. Probably, Alex, a few points. One is that I would say the venture capital ecosystem is just also less developed in Europe than it is in the US. So there's a question of history there and of development of the ability and the knowledge and the skill of corporates to build an effective corporate VC that is investing in relevant profit generating deals. So I think it's also a question of history. And then there's a lot of things that come with that. If you have done more deals, you're likely to be doing more deals, right? Because you're already connected to the founders. You get you connected to other VCs, so you get more visibility on deal flow. And there's a whole package that comes with that. How do you have more presence in the best deals? And then if I'm a European founder, what kind of, when I do my Series A, what kind of CVC do I want? Oftentimes it's the point when I actually want to expand in the US market. So it makes a lot of sense to then go with a tier 1 US CVC versus staying in Europe. So those are from my perspective sometimes.
Okay, understood. I don't know if we have like maybe last question from the audience. In case we don't, I think we're out of time. Yeah, I probably don't have time for questions. But Martha, Omri, Michał, thank you guys so much. It was a very interesting conversation. I think we should continue discussions offline as we meet in person and try to do something together as well. Wishing you all the best. Thank you for participating in our event, and have a great summer. It is SummerSaaS in the end, so summer is important.
Thank you so much.